Hi guys, welcome to Traders Talk, and this is your host Ming Hon. And what's happening this week? All right, great for you to take time to join us, and it is always exciting show for us, at least for me. Yeah, and what has happened last week, we will talk about shortly, and then what do we expect this week itself? We're coming to the end of November. We have just finished November option expiry, and we are moving on to the December expiry, which is the last month for the year. And hopefully, we still get a good December month at least. The 11th month has not been good to you. Hopefully, the 12 months will be something good to you. Hopefully, the Santa Claus rally would also come. Yeah. All right. So, for those who have just joined us, welcome to Traders Talk. And this is actually a show where we talk about trading the stock market using options mainly. And of course, if you are investing or if you are trading the stocks, it is also a show where you can also join us. And of course, this whatever we talk about the markets and the stocks, the strategies would more be on options. But of course, the things on technical charts which we actually speak about would also be relevant for your stock trading. Yep. And mainly, we speak about the US market, maybe some stocks related to the China side, which are also listed on the US stock market, we will also cover. Yep. All right. So, what has actually happened last week? Practically nothing much. All right. So, if you look at, if you have been watching the market last week itself, after the CPI release on 10 of November, right, where we had a 7 to 8% pop in the market, and that's where the market practically held on since then. Yeah, we have not actually moved much. We have been going up a bit and then down a bit and then sideways up till yesterday itself is just also a small movement. And we'll just look at the charts just to see where we are till the current week. Let me just share the screen. So for those people who have been watching the market, actually, you don't need to actually watch the market every day. In fact, yesterday, okay. In fact, yesterday, I did not even look at the market. Yeah, because the market is actually quite slow, right? So actually, I slept quite early. I was not well yesterday, so I basically slept early. Let me just put back my face on. You can't see me, right? Uh, okay, all right. Bigger here. Okay. Okay, so actually, I said you don't have to look at the market every day. Depending on how you trade, of course, if you are a day trader, you need to actually actively look at your positions. Or if you are a swing trader, it's not necessary for you to actually look at the trade. You can actually put in your trades, put in your stop losses. If you're trading stocks, stop loss, take profit, and then basically just wait for your prices to go, or just watch it whenever you are free. And of course, if you are trading options, depending on what type of strategy you trade, if you are actually trading on credit strategies, then of course you things are probably a bit more slower because a lot of some credit strategies are non-directional. That's a bit slower. Some strategies are directional, and even when we are saying it's directional, we sometimes still are able to actually have leeway not to have a look at it every day. Yeah, and of course, most of the times during these volatile times, most of my current strategies are non-directional. Yeah, meaning neutral strategies. Mainly, the market has been actually moving. I would say. Uh, Sideways per se, although at certain times you can see that it has a big pop up or down, but most of the times during the duration of the trade, it will actually come back to a certain level. Yeah. So if you look at S&P 500, okay, S&P 500 is basically the the market indicator for the general market which we are in, we actually look at S&P 500. Yeah. So for those who have just joined us on this show, so this is what we see. Yeah. So for those who have been following, you know that basically I only talk about S&P as the market indicator where we are actually looking at the market. Yeah. Okay. So yesterday itself, this is actually the weekly chart. Let's do the daily chart. Yeah, if you look at the daily chart, right? This is the daily chart. We ended the week last week here, right? Here, yeah, you can actually see this was the candle where we ended last week. Yeah, this was the candle. So basically, the market the price did not actually move last Friday. Yeah, it basically opened and closed more or less where it opened, right? You can see this candle here. And of course, since last week, right, when we actually had the show, we did mention that watch out for retracement after the huge pop up. Yeah. So this was actually the huge pop up, right? The week before, Thursday, Friday. Uh, Thursday, Friday, and I think on Monday itself, the market was down. Then, of course, we were saying that watch for the price to retrace before actually going up further. Yeah. In fact, what has actually happened is that it retraced. Yeah, it retraced on Monday. Then intraday, it actually went up. It actually went up higher, but of course, it did not manage to breach the 4,000 emotional level, and it actually closed lower. And of course, from there on, we went all the way down. And I think last week only one day where the market was actually up, which was actually a Thursday, and basically Friday we were it opened, I think, gap up, and we closed more or less where we were. And yesterday itself we were down about 15 points. Yeah. So the thing which we need to actually still watch out is the levels. Yeah, we always watch for levels, and 4,000 is actually one level which you need to actually watch out for. The price need to actually break up above 4,000, but probably this week the market liquidity is low. Mainly also probably people have actually already gone for Thanksgiving holiday, right? Uh, Thursday, I think, is Thanksgiving market is closed on Thursday, and Friday is actually a half day trading. Yeah. So so 4,000 is one level where we need to actually see the price bridge. And of course, right now itself, you can see that I would say another level where we need to actually watch out on the bottom side is the 3,900 level. Yeah. So the price because of the huge pop here, right? Huge pop here. The 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 market don't have enough energy to continue to go up. Yeah. Normally, you would see that the prices tend to go up, come down, go up, come down, go up, come down, right? And of course, at this time itself, one day itself, it popped up about six over percent. So the loss in momentum, loss on power, everything. One shot, people sideline everything. Sideline means they put all the bullets one shot, they pump it up here. But of course, now it has retraced, and it may likely retrace to 3,900 before it actually hit this support level here. before it can actually go up. Yeah, but of course, there is also possibility it can actually go lower. Yeah, mainly, of course, due to the market sentiment, uh, that there is another CPI release on 13th of December, and on 14th, it is actually the Fed fund rate hike that is the last one for this year. Is the last one for this year. So far, the Fed has actually continuously raised by 75 basis points at the last four Fed rate meetings, and the last one, of course, the expectation currently it is 50 basis point, but recently there was a Fed member which says that they would not. There is also a possibility that they can do a 75 basis points. So that's why once that statement came out, that also scared the market a bit. That it is a bit undecisive right now whether to pump one last round in, punt. I say punt, one last round in for uh, uh, for for the prices to go up, yeah, or if they put in this round, and in case the rates are higher than expected, then that will actually cause the market to actually drop back to the lows, yeah, about 3,500 levels. Yeah. So these are the things which we need to actually take care. So that's why when I say we are more in neutral trades, this is actually one of the reasons because of the uncertainty whether it will actually go up or go down. So the trades which we are actually taking right now is more to the neutral side. Yeah, because why neutral? I mean, because as I said, the things can actually go two ways, right? And when you actually have a neutral strategy, basically these are all mainly on the credit side, uh, where we basically sell options. Yeah, when we basically sell options, and of course, the most common and I would say define risk where you can actually cap your risk is actually using an option structure called Iron Condor. Yeah, we have actually covered Iron Condor multiple times on our traders talk. In fact, last uh, last week last week itself, we have actually closed our Iron Condor trade on XLE. Our Iron Condor trade on XLE, which we basically did Trade Digest on the show on I think 16 or 18 of October. Yeah, we did one trader stock show where we basically did a dissect on how to actually structure out an iron condor and XL on XLE, and of course we did that pre-market, and during the market itself we have actually entered into the trade. Okay, so this was actually the iron condor trade which we did on 18 October. Yeah, this is 12:11 a.m. Yeah, so I did it after midnight, but the show which we actually featured was on 18 October. We did iron condor, and basically an iron condor comprised of four legs. Yeah, one on the upper side, one on the lower side. On the upper side would actually be a bear call spread, which we did. We sold a 90 call, and we bought a 95 call. And then on the lower side is actually comprises of a bull put spread, which we sold at 75 put, and we bought back uh, another one at 70, same expiry date, which was 18 November. Yep, which was basically last Friday, right? Last Friday. Okay. So we did that on the show, and of course, on the show itself, we also covered the basis why we actually uh, entered into this iron condor, and basically we actually entered at this place here. I think you can see my small mouse, right? Okay. We basically entered at this here on 18. Yeah, and of course, during the show itself, we did mention that what we actually expect for this XLE was we expect the price to continue to actually go up, to continue to actually go up. And of course, because of the past resistance level at around 91 to 92, right? We expect that it can test the upper boundary of the iron condor, and then it would actually come back down. Yeah, come back down because of the resistance of this stock between 91 to 92. Yeah, here actually, if you can move the chart um, towards the back, you can actually see that there is a resistance level at 91, 92 prior to this. Yeah. So that was our thesis. And we also mentioned that, of course, because when we do an iron condor, there is actually a upper and lower boundary. And as long as the price falls within these two boundaries on expiry, we will actually uh, win on the trade, win on the trade. But of course, because our expectation was that the price would actually continue to go up, right? We said that okay, if you want to be safer, you put another bullish leg, which we did by another bull put spread on the bottom. Yeah, that means basically our we had an iron condor, yeah, the normal one, which I actually shown you just now. On top of that, we actually put in another bull put spread at the bottom. So basically, we had actually uh, another vertical spread, which is a bull put spread at the bottom. And of course, what will happen is this uh, leg would actually be profitable when the stock price goes up. Yep. So of course, the other leg, which is on the call side, would incur a loss because the price actually tests the upper boundary. But the bullish leg, which is double at the bottom, right? We have two of these, right? Would actually protect the profits for a while. Yeah, but of course, uh, we needed to hold on to the trade almost actually right to the expiry date on the 18th itself. And of course, the lower legs we have actually exited early at a small debit of 1 cent each. We just kept on to this call spread uh, to the last day where they had actually a retracement, small window retracement, because the price was actually between 90 to 90, between 90 to 95. And only on the last day, basically, it went down below 90, and we actually exited the trade by buying back the call at 44 cents, at 44 cents. And the total trade which we did, total credit or collected was $205, and we exited the full trade with $204 profit. Not bad, considering um, that the price actually tests the upper boundary. Of course, although if you did not did do the additional put below, the additional put below, you will still profit on the trade because you would have closed the trade at 44 cents plus 1 cent for the bull put spread. So you have closed it at 45 cents, and then the total credit for the iron condor uh, that you received was 152. So 152 minus 45 cents, you still get a profit of 107. Yeah, 107 for the iron condor. But of course, you would be uh, very early on to the trade. You would actually see loss in your P&L. You will actually see losses in your P&L. Yeah. I did not see losses in my P&L until closer to the expiry, mainly because I had another bullish leg here to actually protect the trade, almost about 90 over 98 cents to actually protect profits, to actually protect the trade with the losing side, which was the call spread, right until closer to the expiry, where this leg went into profit. Yeah. So this was the iron condor trade. You can refer back to the trader stock. We have also put it on TikTok. If you go to the TikTok, you can also look at the trade. If not, go back to the trader stock on 18th of October. And in this week's newsletter, we had also explained the winner, basically how did the trade go, and basically what kind of adjustments which we actually did or did not do, and also the rationale of our trade, and what were the contingencies in case the price continued to be above the short call strike on expiry. What could we have done for the trade? We have also explained in our newsletter. You can also refer it in the newsletter. Yeah. And this newsletter, I send it out every Monday for all the subscribers. You can actually get it right into your mailbox every Monday. Yeah. So coming back, yeah, so these are the type of trades which we do, neutral trades, and of course, um, the the reason is of course there are a lot of within the market here, right? There are going to be bound to be a lot of resistance, right? Resistance on the upper level for the market, and also at the same time, there are also so-called strong supports on the bottom of the stock prices. Yeah. And in particular, if you look at SPX, you can also see that there are a lot of resistance. And of course, this kind of resistance are the levels where you can actually place your short call strikes for the vertical spread on the iron condor. You can actually place it at levels such as see, you can actually place it at levels such as, now we are here, right now we are at 3,940. Let's take SPY. Yeah. Okay. So if you look at SPY, right? So we are actually at 394 today, 394 today. Uh, and of course, the levels which we can actually put the strikes on the iron condor, I would say 394. This is one level, 410 or 410, 410. I think you can even structure up to 420 levels, 420 levels, 420 levels. In fact, I did also entered into a vertical spread uh, on SPY on the call side. I think at least I did 420. Just let me check my trade. I think at least 420. Yeah, 420. Or you can actually just very simple. Like I always do, just choose delta 20 for the placement of your short call strike, and the width of the trade depending on what is your risk. Uh, you can actually just depend on your risk to actually do the width. Of course, if you do a width of $5, then basically the risk would be 500 minus the credit received for your call spread, which is actually on the top side. Yeah. And of course, on the bottom side, you can do levels like 370, 370. 370 would be one level if you can actually do it at these levels. Yeah. 370. Yeah. Let me just see. Uh, 370 SPY. Let me just check SPY. But of course, the 16th December is actually too short expiry to do. 30th December would still be okay if you do it today. 30th December will still be okay. I think at Delta 20, 30th December, you can actually reach the price of 372 for the put strike. 372. And for the call strike, you can actually reach 416, 372, 416. 372, 416, 416. This is 416. Yeah, 416. 416, 416, 416, 372, 372. Okay, so more or less you can see that this 416 is actually above the resist, resistance level here. Yeah, it's above here. So you have one protection. You have one protection here. On top of that, you have another protection at the 200 moving average. This is the 200 moving average. You have another protection here. Yeah. So this is the daily, right? Yeah, daily, this is 200. So you have two protection. One is at the 200 moving average. If it breaches, then the next level is at this level, which is at around 411 level. There's two protection here if you keep your call spread at this level. Yeah. But of course, because the market is retracing, right? So basically, last week I did not straight on enter into uh, immediately an iron condor. I just did the call spread on the top first. Let it retrace lower. Let it retrace lower, uh, lower level. Probably if it can go back to the 390 level or lower, yeah. Then from there on, I can put in another lower lower bull put spread, so that I would have even more protection going even further down, because the protection uh, for the lower side is actually uh, now I'm actually above some of the protection, you see. So this is one level of protection which is at 368. The other levels are at 362, and of course the lowest level is 350, which I probably can't go that low. So now if I do it now, I would actually be above the protection level. Yeah, above the protection level. I would rather wait on the put side for me to actually do it. If I can get this short put strike of the vertical lower, yeah, lower. So of course, when you trade, not always you need to actually structure out the trade, the full trade at the same time. Sometimes I don't do it immediately, mainly because the price is actually having a bigger risk on the lower side, but it is actually suitable to do on the upper side. Then I will actually take the upper side first. But of course, at the end, the intention is still that for me to actually eventually enter into a neutral trade. Yeah, so I just split the execution time when I actually execute the trade. Yeah. So this is one, of course, how we can actually do the trades, and how basically we put in our positions based on what kind of price, where is the price is, and of course based on where the hypothesis of the price will be. Yeah. And of course, I would need to leave the trade. The timing is also important, because if I do up till 30th of December, right, 30th of December, then of course I would actually pass the critical event time of the 13 and 14 December, which is CPI and also this Fed fund rate, right? Where the market can actually move big during that 2 days. During that 2 days, uh, big movements like 5 to 6% kind of movements. So of course, before that date, I would closer to that date, I would actually have to leave or close the trade. Yeah, I to keep the trade. After that, then basically I would either risk it shooting up to the top, or going below, going down below. Yeah, so that is another consideration for keeping trades during major events. It's all going to Nasdaq, right? I mean, you can also see that there was actually retracement here, and of course, we said basically the patterns are more or less the same as the S&P 500, right? Where you actually see this is even a more clear structure, right? Yeah, so this was actually a double bottom which actually formed, and of course the price nicely breached above the what is that, above the neckline, above the neckline, and of course that time we did mention we actually want to see a retracement coming down uh, with a bullish pin bar, with a bullish pin bar. Of course, that did happen here uh, at this one, yeah. But of course, this one would have actually caused a lot of people to long to long it. But of course, the next day you can actually see that the price have actually dropped. So this is actually a bull trap in the making, yeah. And of course, right now, the how to say, the market, the sentiment is still on the downside. I would say the sentiment is still on the downside, especially if the volumes this week will be less due to the holidays. Yeah. So this is another thing which you guys have to watch out for. So this is actually the daily chart, right? So for the NDX, basically you are also there's actually also a lot of hit, resistance above at 12,000. Here is 12,006, which is actually a very high one. The immediate one which we actually look out for is at now where are we? We are at 11,500, right? So the immediate one which we are looking at is somewhere around here, which is at about 12,001 to 12,200. 12,001 to 12,200 level. Yeah. So this is 12,000, which was the top of this candle, right? Which is also one level where the price needs to actually bridge first. Yeah. So far, of course, on the general market side, corporate side, quite a lot of negative news on layoffs and all these kind of things, right? Which is actually coming out, which is basically how to say indication of the companies preparing to have a slow market, slow economy. So that's why they are actually cutting costs to prepare for that. So of course, whether the economy will continue to um, be slow would also depend on the decisions by the Fed, whether they would continue to aggressively hike the rate, whether inflation would continue to be high, or it is actually more on a control basis, so that the Fed can also reduce their aggressiveness in terms of hiking the rate, probably also towards reducing the level of the rate hike, the values, and eventually maintaining it at that level for a while before cutting back rates. But of course, that will have to come after the inflation problem is solved, and they are satisfied that won't be a problem for them anymore, and that's the time where the how to say, the market would continue to recover. But in fact, the market would actually recover much faster than the economy. Yeah? Because all those indicators are actually lagging indicators. And of course, the once the market actually goes up, right, then that would also be good for the how to say, I mean, good for the economy, because that would actually show that things are going to recover. Yeah. So this is Nasdaq. Yeah. In terms of stocks, maybe we can still go through some of the stocks here. Uh, Of course, right now you can see stocks like Apple. Apple has actually retraced these few days again. Problem with the plants in China and all COVID lockdowns and all affecting them. That's one where production are affected, then you can see the price retrace. In fact, most of the China stocks itself had a bit of retracement since late last week. Again, mainly because of the China lockdown. I mean, that's a bit volatile if you are actually very directional on China stocks. Though you can't hold it if you are trading, you can't hold it for long. If you are in profits, I would say take profits and wait for re-entry levels. If you have actually kept your long trades on stocks like Baba, JD, and all right, you would have probably gone into losses right now if you have actually kept your trades since the last rally. Yeah. Okay, Visa, you see that they have a bit of resistance at this levels 215, 216. Yeah, you can see that the stocks is not able to actually breach these levels. Yeah, you can see that at 215, 216, there's going to be some resistance. It even before it actually reaches here at about 212, 213, it already retraced down. The same happened in the last round, right? It went all the way to 211. Then you can actually see it retracing. Yeah. So Visa today itself, Visa no, so free market not up yet. Okay, so Visa a bit resistance. If you actually want to, it actually already came down about $5 here, about $5. Yeah, $5. But of course, if you actually want to place the trades, then of course backhaul spread would you can still place the backhaul spread at higher levels here, probably 216 level backhaul spread is possible. Yeah, it's possible. Uh, and we are actually again looking to place trades at or above resistance level. Yeah, so this is one resistance level. Yeah. Bullish trade, probably not for the time being for Visa, not for the time being. If the price retrace back somewhere to the 200 levels, then you can actually see possible possible bullish trade on Visa, but not at this level currently. But also look at the overall market before placing trades on individual stocks. We always look at the overall market side first, then we look at the individual stocks. Yeah, PayPal. Uh, I don't touch PayPal mainly because of very bad experience. Right? Yeah, you can see that those who had traded PayPal's, right, it would actually be quite bad experience. Yeah, the price actually came down from I don't know 200 something, 280 or something. Where is the top? You can see, yeah, 312. Now it's just 80, yeah, 312. So it's just 80, yeah. Mastercard would be similar to this Visa. The patterns between Mastercard and Visa is more or less the same. Yeah. Baba, yeah, like I said, slight retracement. Every time it pops or it goes up, right? You need to actually take profit on the Chinese stocks. Yeah, they won't hold on long because uh, one time they unlock their people, another time they lock their people, so it's a bit messy on the China side. But overall, if you are long term China, I would say the current levels would be interesting levels for you to actually do on a longer term basis. But of course, there can be still some downside to these stocks. But even to the lowest, you look at the lowest, it has actually gone for this Baba is 64. then of course you need to manage the risk between the current level, which is 81 to 64, whether whether it fits you, because that is the level of the support on the lower side, which it has, the lowest it had actually gone, I would say. Yeah, Baidu similar, JD similar, uh, Walmart has been going up, I think, since its earnings announcement here, right? Earnings announcement here, yeah, it has actually popped up, and of course, right now, I would say probably to 160, then it will actually look at another level of resistance, which is another $9 up. Yeah, so it just filled back the gaps here. You see, yeah, it just filled back the gaps here, gap down here. And of course, right now here, probably till December, Christmas, Santa Claus rally possible, but from the choppy trades here, I don't see strength for it to actually move significantly up. Yeah. Google, yeah, I mean Google, you can see that it has a lot of how to say, the momentum to go up, right? You see, is hitting this. This should be 50 moving average, right? It hits 50, it comes down. It hits 50, it comes down. It hits slightly above 50, it comes down. So there is actually a lot of strong resistance at 50 moving average. This one, no, probably not. KWeb China stocks, China ETF on the tech side. What else? Okay, CME may be an interesting stock for long-term buy-in. CME long-term buy-in. Yeah, you can see that the price. CME is actually the Chicago Mercantile Exchange. Yeah, those exchange responsible for all your options. Yeah, yep. So you can actually look here. Would be if it comes down back, that would actually be interesting buy-in for me if it actually comes down. But of course, this you would need to actually hold on longer. Yeah, hold on longer. Of course, there is how to say, uh, there is they're actually also trying to create their own crypto exchange under CME. And of course, if that happens, right, then that would actually bring more confidence for people to actually trade crypto, because in the recent problems of the crypto world, right, FTX has actually um, went into bankruptcy, right? That is actually a crypto exchange, uh, ungoverned and all. So that is actually, even though it's third largest, the governance is actually quite weak. And of course, if exchanges like established exchanges like CME, which is in the US, if they are going to do crypto exchange, then of course that would actually be very positive for the stock. Yeah, for the stock. Yeah. Facebook retraced a bit from these lows. $90 is now at 109. Yeah, I would say still, how to say, there's still going to be a bit volatile for this stock. Yeah, for this stock. Yes, actually came down all the way. But of course, if we reach 90 again, this is a good chance because the upside is actually quite high, and of course, 90 is already a very low price for Facebook. Goldman Sachs itself, I would say Goldman Sachs is a bit toppish. It's a bit toppish. You can see that this this was actually the one of the resistance level. It actually breached it for a while before actually coming back down, and yesterday it was actually slightly up. Yeah, I would say if it actually comes back down, then of course they would how to say give back some of the profits coming back from here, all the way from 290, right, all the way to 370, which is actually quite high. Yeah. So this one we have actually did a bear call spread above. Yeah, I think at about 400 level. Yeah, 400 level on the short spread. JPM similar. It has actually breached the resistance here, and you can see that it is actually again losing momentum right at this place here. Yeah, if the overall market goes down right till CPI, I would say this would also give way mainly because of the profit taking for the people who have actually wrote this huge trend up. Yeah. uh, Citibank, this is the Cigna Healthcare. Healthcare gave up a bit right here before it came back up. Yeah, healthcare, CI and UNH also similar type of pattern. It had a huge dip again, crossing this 200 moving average, right? This 200 moving average. Each time it touches or go down below 200 moving average, I would say most of the time, historically, it would be a good entry point for a long trade. Yeah, yeah, yeah. So this one, two, three, four, yeah, five, yeah. Yum China side. Although it's not China, he's having his business in China, KFC, right? Yeah. So similar, we follow more or less the China sentiment. Yeah. Starbucks went quite high. McDonald's did reversal. Yeah, right here. Uh, we already closed our McDonald's trade. We did earlier when it was somewhere around here. This we did another bear course pipe. We did a bear course pipe somewhere around here. Yeah, and have since closed the trade. Yeah, yeah. So I think we have covered quite a number of stocks. Twitter no more already. This is the last day Twitter traded 53.75. Yeah. Amazon, yeah. Okay, Amazon is actually quite weak this past 1 2 weeks. This past 1 2 weeks, and of course, it may continue to actually come down. Yeah, and if it does, then of course it's again an opportunity to long it again, or to actually enter into a long-term trade. Yeah. In the last round, where we did our traders talk, we did one immediately after traders talk, somewhere around here, entry level at about 88. Yeah, 88. Okay, Nike went a bit too high. If it retraces back somewhere around 90 95 level, yeah, that would be positive, good for entry long. J&J, Adobe, yeah. So these are the Chinese stocks, Microsoft. Yeah. Microsoft, Microsoft has a huge rally together when the market had rallied. So now it's actually moving sideways. If it comes down back to about 225, yeah, then that's another good opportunity to long it. But again, caveat: look at the overall market trends, and also depending on if you are trading it or if you are doing a long-term investments. If you are trading it, then of course, if there are events like the CPI and all, then of course do take care of huge movements on the stock. Yeah, I think I've covered quite a number of stocks in our watch list this week. And of course, I would say this week would actually be probably a slow week. And of course, slow weeks are good for theta decay. Yeah, slow weeks are good if price are not moving. If you are actually entering neutral trades, right? If you're actually entering neutral trades, then of course it would actually be good because the price don't move, you make money. Yeah, so that is a great thing on if you're actually trading options, right? You can actually make money even if price don't move, provided you know what kind of strategy you use. Okay, so next week I'm having a break. I won't see you guys. I hope that you guys will be able to take care of yourself. I'm sure you do. And of course, like always, if you have any questions, do put it up on Facebook or email me. Then I will be able to actually answer your questions or get you unstuck of unstuck of any problems which you face on your trade or seeking SOS. Yeah, I'm all here to help. And I wish you a very good trading week. Happy Thanksgiving for those people who are celebrating. Most Asians don't celebrate Thanksgiving, yeah, unless you are Matsali or what. Then of course, happy Thanksgiving to the listeners out there. Yeah. So until I catch you in December. Until then, trade safely. Have a good week. Bye bye.